Hello everyone, this is Mark Leibovit from VRTrader.com, and here we are on Monday evening, August 31st. This update was hopefully to be posted over the weekend, but we had some technical difficulties. But here we are, and we're going to talk about George Soros and the coal stocks. Meanwhile, you're looking at the homepage of the Leibovit VR newsletters, which incorporates several products. We'll get to that more later in the broadcast. Here at Metastock, we look at three versions of the volume reversal indicator, which is available on a 1-month trial. The three versions are sequential, which we use in these videos, which posts all positive and negative volume reversals. The directional, which filters out repetitive volume reversals and provides a stop. And the 2-day version, which is based on the premise that following a volume reversal, positive or negative, you tend to get movement in that direction for a couple trading days or more. Meanwhile, let's take a look at the first chart here, and we'll talk a little bit about our friend George Soros. This is Arch Coal. Billionaire George Soros, who has demonized fossil fuels for years through his think tanks and political contributions, seems to have warmed up to big coal. Now that these stocks are dirt cheap, this left-wing hedge fund legend has raised eyebrows with major purchases of stock in two large coal companies, firms his critics say he helped bring to their knees. While buying low is the hallmark of any shrewd investor, buying coal goes against the political and environmental ideology Soros has so long espoused. As we all know, the global warming hoax is pervasive out there regarding domestic coal production and other resources. But Soros bought 1 million shares of Peabody Energy BTU, which was selling for about $90 a share when Obama became president, and is now just coming off the $1 a share level. Soros also reportedly bought 500,000 shares of Arch Coal, which we're looking at on the screen, which is grossly undervalued compared to where it's been. We'll see that in just a moment. Soros presumably will sell these shares at a hefty future profit. So let's take a look at what happened here. This is a daily chart. Using the sequential indicator, we had a Leibovit positive volume reversal back here in late July actually, July 30th. We generated another positive ER here on August 17th. We crossed above the 50-day moving average. The VR said we should go higher. We had a rising stochastic during the period, particularly in the last 10 days or so. In trading on Monday the 31st, which was today's close, we didn't close above the 200-day moving average, so I suspect we should get a little bit of a pullback here. Let's step back a second and look what the story is here on Arch Coal. 300 and I know it's hard to believe, $369 a share here back in 2011. And if we go back here to June 30, 2008, $774 a share. And what was the low in the stock? Well, the low in the stock was just about $1. So here we go. Stock's starting to move here. I'm not predicting that coal is a turnaround, but there's been bigger surprises out there. You would think the stock's got more potential, but here it's already had a run. We traded it at VRTrader.com, and we're out, but we're looking for a pullback, and we'll take another look at it. So stochastic, which is a 533 we use, getting a little toppy here. Let's really briefly put on the BTU, which is the Peabody Energy. This is what Soros is also involved with. We want to take a look at this chart to see what's going on there. We're going to add our template here in just a moment. And let's see here. Let's put that up with our VRs. Again, this is a sequential. So let's blow this up. This is the daily chart. Had one little negative in here, but look at the preponderance of positive VRs in Peabody here, which started back on July 22nd. And when you have a rising stochastic and a positive VR, that gives me encouragement to get long and above the 50-day moving average. That was a big plus. And here you have a negative VR. So what do I do here? Well, if I have a rising stochastic, I tend to ignore it. Okay, so here on this negative one back on July 27th, you would have possibly taken that trade, but there'd been minimal profit there. So I guess we held a few days. There might have been some follow through, but I generally, do follow the 533. But stock that's this cheap, that's $1 a share, which has been substantially higher. I'm not that interested in shorting anyway. Looking at the monthly chart, where we go here, we're looking at this is about $74 a share back in 2011. And what was the high here? We're looking at 88.69 back in June 30th, 2008. So another situation where a very depressed stock, maybe you could argue it's short covering. Perhaps that's all it is, but definitely some action here. So it still looks, PTU still looks like it's not inexpensive to me. VR, you got your 200-day up here at $5. There might be more room here. You still have a rising stochastic, so something to pay attention to. So let's close down that chart for a second, and we're going to take a look at something else that I want to mention to you if you don't know about it already. We have launched a radio program, the Wall Street Door radio program on the Genesis Communication Network, gcnlive.com. That's gcnlive.com. Show will be syndicated on terrestrial radio stations as well, so check in on Saturday mornings and we talk about the market and my contrary views, and that's why we called it Raw. So backing up, Metastock is available on a free trial here. I encourage you to sign up if you haven't. It's a powerful indicator, certainly a complement to your other trading, and we'll catch you on our next update. We do have a webinar this Wednesday, so hopefully you can join us.